Good morning, everyone, and welcome to our half-year results presentation for the first half of FY23. Our CEO, Greg Bader, will step through the presentation that we lodged with the ASX last week, and then we'll have a question and answer session. If you wish to answer a question, please use the icon on the bottom of the Zoom tab. If you don't get a chance to ask any questions during this webinar, as always, you can email them through to investors@wrench.com.au, and we will get back to you as soon as possible on those. I'll hand over to Greg now.
Thanks, Sharon. Let's just jump to the main slide. So, not the result we wanted, but revenue is down by 15%, and we'll cover that in a little bit more detail further in the presentation. Primarily advertising sales, products are up, rent pay was starting to get some good growth, admittedly off a low base. And importantly, our core search portal remains profitable, and obviously we're spending money to grow rent pay. This is our mission in life, and to be honest, it's probably never been more important. We're looking nationally today, less than 50,000 properties available to rent in Australia. To put that in context, 2 years ago, we were over 95,000. So it is really tough out there. We're starting to see international students coming back, so that's putting further pressure on. So you would have seen the press nearly every day. It is really tough out there for renters. We've used this slide before and we'll continue using it. It really simply illustrates what we're about. We have the leading portal in Australia for renters. We attract people in, they apply, they move, but that all happens in the process of about 6 weeks. Rent pay gets us into the tenancy phase, and the key driver of rent pay is to maintain that customer relationship. A few little things on our site there, and I guess what this is not showing is how well our website performs comparative to our peers. So, we've got some headline stats there, but what it's not showing is things like page views, dwell time, and bounce rates. We're up there with REA in terms of the quality of the overall experience for our customers, and certainly well ahead of many of the other portals in the industry. Really proud of that. We maintain our position as the #1 rated app for real estate in Australia. A lot of work goes into that, and once again, great effort by the team. Onto our search portal, as I mentioned earlier, it is really tough out there. We're seeing less than 1% vacancy rates pretty well across the country. There's a few areas that are hotter and colder, but generally it's really tight out there. And you can see the two graphs there showing the listings versus inquiries. It's not uncommon now to have 30, 40 people at viewings. It's competitive, it's frustrating, it's stressful. It is really tough. So our search portal revenue, on our product side, growth there. The connection service, our Rent Connect, which we switched over to Origin, we're still pulling all that together, but it's starting to show some really good growth. And of course, a component of that also rolls in through rent pay. Rent Check is doing well. Once again, there's less properties out there, but people are conscious that it's a more and more competitive environment, and looking to get that, I guess, stand out amongst the crowd. Rent Bond was a little down, although we have a number of things in train at the moment to address that, and expect some new news in our quarterly in a month or two. The advertising is where we've taken our hit. Of course, disappointing. The reality of it is our customer segment is really attractive to the first home buyer market, and they make up the bulk of our advertising partners. With interest rate increases, with staff shortages being a really big one, we've found a lot of our building partners are simply putting their campaigns on hold. They need to focus their own resources on completing what they have rather than attracting new customers. So we're a little exposed there. We're putting in a lot of work to diversify our own customer base in this area, and we've got a couple of staff on board that are helping us. So more work to do there for sure from our side. Under rent pay, Just a quick overview slide why it's important to us. Only 5% of the population or 5% of our renting community is looking at any point in time. That means 95% are sitting there latently in their property. They're the sort of people that can use rent pay. These are new slides, and we've used them out of our deck that we talk to agents about. But a couple of things here: the problems we're solving for tenants. So the flexibility is a really big one. So whilst the majority of people still pay week to week, month to month, etc., we're seeing a growing proportion that are time shifting. And the most common scenario here is people funding their wallet on a fortnightly basis, but paying their rent out either weekly or monthly. And the reason for that is because rents are going up. They're becoming a more and more significant piece of your monthly expenses. So people want that money out on payday, quarantining for effect. The other two pictures there on the slide, the Origin deal on the cashback, cost of living we know is huge. $260 back just by simply using an Origin plan. And let's not forget, Origin is one of the most competitive products out there in the market already. So on top of that, you can enjoy an extra $260 a year, $5 a week if you bundle up both services. Credit score builder, safety nets still continue to be very popular. And what we're not showing here is our buffer solution as well. So we have about 20% of customers now that are overpaying. And that is they're building up a buffer. The reason behind that is they may have intermittent or sporadic income. So building up that little buffer, getting 1 week, 2 weeks rent ahead just gives them a bit of flexibility if they're short 1 week, etc. So there's a whole, I guess, bunch of products and services in here. Not everyone appeals to every renter, but as a package, they really put the renter back in control. For the agent side, there's a bunch of things in here, but the big one for the agent side is by us offering all this flexibility to the consumer, whether it's time shifting, value shifting, payment choices, we are seeing across our base a lower than industry average arrears rate. So that removes a significant administration burden from the agent to start with. So this is the sort of explanation we do. So basically, for an agent, they get certainty. They always get paid when they want to get paid. Customer has all the flexibility. The agent gets to disengage from the arms race around payment methods, etc. We take on that. Easy reconciliation, pay files. We integrate into all trust accounting systems, etc. So this is our solution, how it backs into the agent's business operations. And we need to do more here in terms of explaining and getting out there and positioning ourselves to agents. For the customer side, we're starting to get steady growth. We haven't hit that game-changing growth yet, and that is certainly a focus for this half. We've got more than 1.5 million sitting there in balances now from people using buffer, etc. So there's some options around that. But yeah, we're getting there. We've identified our key target markets, and we're stepping up our marketing activity to cover those. So this is a nice milestone to hit in February. We passed through 75 million. Rate of growth accelerating, and we expect that hockey stick to continue. Marketing, we get a lot of questions about marketing, and we have started marketing. You will predominantly see us social media. There's a bit of a Google component to the spend, but specifically we're targeting a certain demographic. So the 60-year-old me won't be seeing a lot of the ads. They're targeted towards the consumers that consume rent pay. And we, I'll be honest, we're doing this on a limited budget as well. So you won't see us on TV ads or billboards for the first half. We need to spend, we need to measure that spend, make sure it's effective, tweak it, and keep that going continuously. The other area that we'll be getting into is around the influencers. There's quite a following amongst the fintech influencers, the renter influencers. So working with those people and explaining the advantages and whatnot is a key part of us going forward as well. ARPU keeps tracking up steadily. Bill smoothing is certainly helping that. We're looking at further products around the mortgage builder side of it. This is a bit of a passion project of mine. It's not without its complications, but if we've got a young person that wants to move into a mortgage, they need to hit two key thresholds, and that is demonstrating serviceability and building that deposit. We think with rent pay, there's a way for them to do both of that. We were awarded an ACL recently to allow us to head in that direction. Probably an interim step for us is to look at paying interest on wallet balances to encourage people to build their balances, save for a rainy day, etc. It sounds simple. The complication really around that is how to manage that from the consumer side. There's ATO reporting requirements because there's income, etc. So we're looking at all those options as well as rewards in there as well. So there's more stuff coming for rent pay as we go forward. We've covered this before. It is a massive market, and that's why we're in there. 60 billion a year. We haven't even come close to touching the size. So we're really buoyed by the size of this. There's no one else really playing in this space. Remember, we're the only one that faces the consumer. So whilst we're attractive to agents, if we've signed up agents, this is a product that consumers can use independent of agents. So we've created ourselves a dual-sided marketplace, and pretty proud of that. In terms of outlook, I hope people have noticed we've refreshed our rent.com.au site. It's much more modern look and feel now, much more consumer friendly. There's still some tweaks and changes that'll be going through. So we're already starting to see some SEO and our organic traffic's improving based on those, and which were a part of the driver for doing it. We've got some product extensions coming through for renter products as well, and as I alluded to, we'll see those in our quarterly. Rent pay remains a focus for us. We want to get that step growth. We've currently got ads out at the moment for staff to help us with the agent recruiting. We're only 25 people, so we can't do everything all the time, but we've identified we certainly could do with some extra horsepower in that area. And look, we well funded, and it's just head down, bum up for the next half. That's about it. I probably rattled through that too quickly, Jan. I noticed we've got a couple of questions there.
Yeah, so the first question, and just a reminder too, if you do want to ask questions, there is a Q&A function, so please type them in if you like, but the ones we've had through during the course of the presentation. Question from Paul: how's progress with regards to signing new agencies to use RentPay?
Yeah, going well. We've got, if you imagine there's a pipeline, everything from cold to hot. There's a number of conversations, and we've actually signed up agencies over the last few weeks. We don't announce every agency, and that's a joint thing. Sometimes the agency doesn't really want to talk about it too much, not because of the product, but because they don't want to raise concerns with the tenants. They would rather the communication be handled one-on-one, etc. But yeah, it's going well. As I mentioned, we're bringing in a dedicated sales team to help us in that area. A lot of this is, I'm sure people realize B2B is much different to the B2C side. So it's sitting down, conversations, multiple conversations. There's different stakeholders involved. So it's generally a slower process, but we're well progressed.
The next question is from Andrew. You raise capital for marketing, but I can't see much of it around. When will the marketing start?
Well, I asked the same thing, and evidently I am not the demographic either. But as I said, we've got a limited budget, so we need to spend it wisely. So, the major social media platforms, TikTok, Facebook, etc., allow very targeted marketing, so you get best bang for buck, and that's what we're doing. That said, you'll start to see some agent advertising coming through as well. Certainly in the industry, industry publications, but also on some of the other portals and LinkedIn and etc. So I'd imagine we'll start to see a bit more of that. But it has started to ramp up, and we've got a plan of attack in place for the remainder of the year, and we're starting to lift.
A question about advertising revenue from Chris. Advertising revenue has been up and down. Why is there such a big drop this year? I can answer that, Chris. So as Greg mentioned, so a large proportion of our advertising clients are in that home builder, sort of land developer segment. And we've not been the only ones affected by them pulling back their marketing. So all the other portals have been affected to a greater or lesser extent. It is an industry issue for them. You would have seen a lot of press about builders going under, so it's not unexpected that they've wound back some of their marketing. I'd also like to just point out that we have grown very strongly over the last couple of years, so 25 and 28% over each of the last 2 years. So the sort of relative pullback is kind of getting us back to levels where we were following that strong growth over the last couple of years. But that volatility is one of the reasons why rent pay is so important to us. With the annuity income stream that it brings through, it just makes our overall earnings a lot more consistent and protects us from cyclical volatility. Cool. There's a question from Brian. Pretty straight to the point. Do you have enough cash?
Look, we do have enough cash. We have, and we budgeted on that capital raise. We've got a budget that supports that. So yes, we do. But I just want to be clear on this as well. For anybody that follows the fintech, proptech world, there's been a whole bunch of celebrated cases recently that have blown 10, 15, 20 million on marketing and then have closed the doors. We are conservative with our spend. We are targeted with our spend. And we think that is the prudent way to go. Notice there's another question there. What do we expect in terms of rent pay customers? Look, rent pay is interesting. Our focus is on growth for rent pay. I've mentioned that I've seen our growth for the last half is fairly, it's nice to have growth, don't get me wrong, but we really want to lift that growth. So we've got a couple of different angles we're playing here. We've obviously got our marketing starting on a B2C, so getting people in the front door. We're bringing in a BDM to help us with the agent sales, so increasing more exposure and more conversations and sales on the agent side as well. So between both of those, we're expecting to significantly lift our rent pay growth going forward.
You don't see any more questions there, Greg?
Look, and once again, sorry if I rattled off that too quick, but we're on investors@rent.com.au. Please feel free to flick through anything. One-on-one, happy to have a chat. It's a horrendous market out there at the moment. Renters are doing it tough. We've invested a lot of time and a lot of money in our rental portal. It's really starting to hold its own. If I rattle off the top portals in Australia, we're still REA number 1, Domain number 2. We sit in that 3, 4, 5 space. Now, if you measure it purely on traffic, there are other portals that have the full suite of houses for sale, etc., that we don't have, so their traffic's larger. But when you drill down into some of the core web stats that contribute to a ranking of a website, we're certainly well up there. So really proud of where we are, really proud of the team. We see this half as our focus is on rent pay. We're recruiting to make that happen. We're spending on marketing to make that happen. Our marketing spend forecast for this calendar year is more than we've ever spent in the business. So yeah, we're well positioned. We're well motivated. Our development team's finally fully resourced. We're ready to go.
Well, thanks everyone. If there's no more questions, we might call it there. Appreciate your time and logging on this morning. Thank you very much.